It's certainly in the late stages of the game. This bull market's been running for 9.5 years. If you just look, we've had multiple expansion for several years. Right now the S&P 500 is trading at a slight premium to its long-term average, but profit margins remain high. And really what we feel is that to generate returns going forward, you're probably going to have to rely on earnings growth. We won't have the one-time benefit of the tax cut to the same degree next year. And so you should see more muted growth. Now, that said, things might be a little bit more volatile, but this is certainly the kind of place where you look to dividend-paying stocks to provide both defense as well as to reduce volatility. And you look for companies with pricing power and stable earnings streams.
Like what?
I think this is the type of market where healthcare, as you've seen some of the technology stocks roll over, a lot of investors have actually moved to the stability of healthcare, where you have positive demographics in your favor. After the election, now that we've to some degree taken a lot of the pricing cuts and the removal of the Affordable Care Act off the table, they offer a little bit of stability, and they offer stable dividends. Other places investors could look to actually just to go to places that are undervalued. Industrials is one instance where they may not be as defensive, but because of concerns of trade war, you have lower valuations than you've seen in a couple of years. Industrial capacity utilization is very high, and so eventually companies are going to have to start capital spending because things are going to start breaking down. And you also would benefit there from the recent election from things like increased infrastructure spending and increased defense spending. Okay. And again, you can just rely on low valuations.
So, Jim, you are actually seeing tech as a real opportunity right now. Are there any specific stocks that you like?
I am. I'm really excited about what's going on in the market right now. We've had a pullback, and individual stock picking is way more important than just buying the whole market and seeing it go up. I think Microsoft is very defensive with a valuation around 22, 23 times next year's earnings, and you're not going to stop porting your business to the cloud because of tariffs, because of the Fed, because of taxes. That's a trend that's going to continue for the next few years. So I think Microsoft is a great place to hide, a great defensive characteristic as well as some offensive characteristics.
How do you think about valuation in this market? I mean, if you take a look at Microsoft, for instance, by almost any valuation metric over the past 5 years, it is trading more expensively than it has in the past 5 years. So you're paying for that element of defensiveness that you like.
I think what's changed in the Microsoft story over the last couple of years is you've gone from a company that was seen as a sub 10% grower to now a company that's probably a mid-teens grower. So that's a real change, and it should warrant a much higher PE going forward.
Any other tech stocks? I'm curious if you have a position on or a position in Facebook.
We do own Facebook. I think the big thing that everybody's missing, and certainly the scandal and all the questions around their business have to be answered. But at the end of the day, it's all about advertiser effectiveness. And every company we talk to says the ROI at Facebook and at Google is so much higher.
Does it matter? Does an article like the one in the Times, does it matter to those consumers, and I'm including in the consumer class, the users and the advertisers?
At the end of the day, I don't think it matters that much. It matters to us from an ESG perspective, and we look at those issues. So we have some real questions for the management team that we want addressed. But at the end of the day, you're not going to stop going to Facebook. You're not going to stop going to Instagram as a user. And if that's where the users are, that's where the advertisers will flock to.